Hey, what's up guys? John here. I believe we're stepping into a real crypto winter. Unlike, what most people would view as a crypto winter. Most people view a crypto winter as what we're in right now, $20,000 Bitcoin. I don't see this as crypto winter. I personally think we're going sub 10K. That's where I think Bitcoin's going to be headed. Sub 10K, maybe 10K, 11K, maybe south. Somewhere in that realm. I don't think we're here yet. Here's why. A lot of people are very either pro Bitcoin or pro cryptocurrencies, and some people think that the whole thing is a scam. But what I think is ultimately happening here is that the consumer is changing. The mindset of the consumer is changing. Many people that were investing in cryptocurrencies or became aware of them and have made their first investment over the last couple of years are no longer in the current financial position that they were in at the time of that investment, whether it be through easy money or quantitative easing, 0% interest rates. People were making more money, they had more money than they knew what to do with, and everyone was getting rich inside the space, and people were just diving in. But now we're starting to see a whole new relationship with cryptocurrencies in the general public. What I think is happening right now is I think we're stepping into an affordability crisis that is going to be unmatched to anything that we've experienced in history, at least a lot of people that are investing today in cryptocurrencies. I think we're going to start to see gas prices really soar, inflation soar, and Jerome Powell, I think, is going to get very, very aggressive with interest rates in the coming 6 months. And as this begins to happen, you have to ask yourself, what is the economy going to look like? What generally happens when interest rates rise? When interest rates rise, companies end up issuing layoffs. They end up firing people. They end up closing offices. They end up really contracting in a very big way. Also, consumer debt gets more expensive. Credit card debt gets more expensive. Auto loans get more expensive. Insurance is likely going to continue just to rise. Everything's going to be going up due to supply chain issues, increased labor cost to fix up houses, remodel houses. Insurance costs are going to be going up, all of which is also going to be conveyed to renters. We could see more rent increases. We could see big problems, right? This wasn't a real thing 2 years ago. 2 years ago, it was just easy street. We all saw everybody on Instagram and TikTok, all these platforms. People are just, poolside, working a couple hours a day. Everyone was happy. Everyone, was just excited. Nothing could go wrong. But now everything is starting to go wrong. We look at what happened here. So the last 6 months, cryptocurrencies have been just slowly eroding, right? You look just in 2020, March, $5,165 a coin, $5,165. Now, what I think could happen here, and I think this makes the most sense, is I think that large funds are going to look at this as the biggest opportunity. And why is that? Well, because if the general public is stepping into an affordability crisis, remember, 58% of America's population, this includes high-income earners, $250,000 a year or more, are living paycheck to paycheck. If a lot of people have their money tied up into cryptocurrencies, right, as time goes, people are going to need that money. And so if they are instigating more fear in the market, whether it be through bad press or through market manipulation, what are they going to do? They're going to shake out more and more and more holders. What is that ultimately going to do? It's going to drag the price down even further. As the price continues to fall, it's going to instigate more people to sell. And all of this is going to do is set up an opportunity for these funds to go out and invest. But you have to ask yourself, do you think large pools of capital are going to buy large blocks of cryptocurrency, especially Bitcoin, at $20,000 a coin when 2 years ago it was $5,000? No. I think we're going to start to see a lot of people stepping away entirely from the crypto space. And at that moment, when everyone thinks that Bitcoin is dead and everything is over with cryptocurrencies, that would probably be the time to invest. But we're just not there yet. Right now, I think people have one foot out the door, but people still have a hope. When people have no hope, that's when you want to start looking at cryptocurrencies. But take a look at this. So Australia, they just laid off 30%. Not a big deal. From 230 employees to 160, right? Bitcoin miners sell their holdings amid crypto winter. Chill, right? Goldman Sachs downgrades Coinbase to sell as crypto winter takes hold. Interesting fact, though, just a few months ago, the Walton family, founders of Walmart, Sam Walton's heirs, invested in Coinbase, right? So they may know something. Maybe they think that Coinbase is actually going to do well at the end, or maybe they just made a bad investment. Goldman Sachs is also looking to raise $2 billion to acquire Celsius Network assets, right? Right now, we're starting to see this crypto winter take hold on, Bored Ape. Bored Ape has been tied up in a lot of controversy lately, but a lot of NFTs are no longer becoming cool. We're hearing less and less talks of NFT projects. I think the NFT project and the NFT world is going to go through a world of hurt. I think it's going to get harder to raise capital, harder to get interest in these projects over the next year. I think it's going to be interesting. But I do think that NFTs have true utility. I really do. But I think that the utility is going to be better positioned to benefit the general public rather than so much the creator of the NFT, which has been, the relationship over the last year or two. It's the creator that makes all the money. The general public really just gets to have a little image or have some type of street cred, but there was no real utility. I think in the future there's going to be real utility and real value in NFTs. You look at everything that's happening right now, and just look at crypto winter. Everything, this is like the last 2 days. Michael Saylor, everything else in the world is inferior to Bitcoin. He's married to Bitcoin. Now, I think Michael Saylor is a smart guy, but I don't think that he's anywhere on the money on that at all. I don't think everything else in the world is inferior. I think rent is more superior. I think food is more superior. Paying your utility bills, having a vehicle to drive and gas in your tank, food in your plate, all these things are going to be much, much more superior than owning cryptocurrency, in which has no real utility in your everyday life. No real utility in your everyday life. It doesn't make your everyday life better unless you intend to sell it at a profit. Now, what's ultimately going to happen here is I think there's going to be so many people gunning for people like Michael Saylor and these large, large funds. They want to see margin calls. They want to see panic. They want to see blood in the crypto space. And as that begins to happen, huge opportunities are going to be, presenting themselves. But look at this. It's not just Michael Saylor. There's a crypto hedge fund at the center of a crisis, faces a risk of default, $670 million loan. $670 million loan, 3 Arrows Capital, a crypto-focused hedge fund, has to meet a deadline on Monday to repay more than $670 million in loans or face default. In the case, it could have a ripple effect across the digital asset market. 3AC, as it's also known, is one of the more prominent crypto hedge funds around and is known for its highly leveraged bets. Built with billions of dollars being wiped off the digital coin market in recent weeks, the hedge fund is facing a potential liquidity and insolvency issue. Voyager Digital, a digital asset brokerage, said last week that it's lent 3AC 15,250 Bitcoin and $350 million in USDC stablecoin. At Monday's price, the total loan equates to more than $675 million. Voyager gave 3 Arrows Capital until June 24th to repay $25 million in USDC and the entire outstanding loan by June 27th. Monday, neither of these amounts had been repaid, Voyager said last week, adding that it may issue a notice of default if 3AC does not pay the money back. Voyager said that it intends to pursue recovery from 3AC and is talking to its advisors regarding legal remedies available. Voyager Digital, and 3 Arrows Capital were not immediately available for comment when contacted. 3 Arrows Capital was established in 2012, right? The founder is incredibly bullish, and he predicted that Bitcoin was going to go to $2.5 million per coin, but then he said that it was regrettably wrong, right? Regrettably wrong. And now they're in the process of communicating with relevant parties and fully committed to working this out, essentially seeking legal counsel to figure out what alternatives and what options they have, right? We're going to see this. This is going to be very common, I believe, very, very common. But the Financial Times reported after the tweet that the US-based crypto ledgers BlockFi and Genesis liquidated some of 3AC's positions, citing people familiar with the matter. 3AC had borrowed from BlockFi but was unable to meet the margin call. A margin call is a situation in which an investor has to commit more funds to avoid losses on a trade with borrowed cash. 3AC has exposure to Luna and suffered losses. The Terra Luna situation caught us very much off guard. And 3 Arrows Capital is facing credit crunch exacerbated by the continued pressure on cryptocurrency prices. Bitcoin hovered around 21,000 on Monday, down 53% from this year. Meanwhile, U.S. Federal Reserve has signaled further interest rate hikes in a bid to control rampant inflation, which has taken steam out of riskier assets. We're going to start to see this more and more. You have to ask yourself, if you have the money, would you want to buy crypto at this space or at this price, or would you want to take some risk off the table, or would you just want to set it and forget it? Everyone's going to have their own risk tolerance, and so it's going to be different for everybody. But I think we are going to start to see a lot of people that have liquidity, a lot of people that have money, want to invest it in something that they can fully control. In some eyes, some people would say it's real estate. Some people would say it's starting your own business or investing in your own business or building out further staff or a team, people are going to want to start taking risk off the table. I think crypto right now is one of the most risky assets that people can invest in. And I think that that's going to pose a big problem for crypto in the short term. Long term, I think crypto has some big potential and big upside. The big question is which ones are going to survive. I think we're in this early stage of more of like a .com bubble where there's going to be some big winners, but there's also going to be some pets.com and some of these ones that people thought were going to do very well, and they ended up doing very little, right? They ended up going under. 3AC is one of the biggest crypto-focused hedge funds, has borrowed large sums of money from various companies and invested across a large different digital asset projects. It has sparked fears of further contagion across the industry. The issue is that the value of their 3AC assets will as well has declined massively with the market. So all in all, not good signs. Not good signs. What do you think is going to happen? Do you think we're going to see a very big pullback across the crypto market? Do you think we're going to see a real crypto winter? A crypto winter unlike anything that we've seen before. Crypto winters before, mind you, they weren't short. We look at 2017, we were at a high of 19,650, so almost 20 grand. And that was December 2017. It took, even this bump right here, 2019, it went to 11,000, right? It took roughly 3 years. Roughly 3 years to get back to those numbers again. Roughly 3 years. So you have to ask yourself, how many people are going to, if we have a similar situation, I don't know if we will, but if we do, how many of these companies, of the 19,500 altcoins that are available, how many of them will be around if this lasts a year and a half, 2 years? How are they going to fund their growth? How are they going to pay staff? How are they going to continue to invest in the projects? They're likely not if their valuations are continuing to plummet, right? So I think we're going to see some really big winners at the end of this, but the question is which ones are going to be the big winners? What do you think about this entire situation? Where do you see crypto going? Do you think we're going to see a situation in which it takes a year or 2 years or 3 years? Or do you think that most of these coins are going to be completely deemed useless and go away entirely? Curious as to your thoughts. Drop your comments below. Hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in real estate, crypto, and the overall world. And subscribe. You'll also subscribe on my second YouTube channel. It's an interactive call-in show starting this upcoming week. So be sure to subscribe there. It's pinned at the top comment below. And also follow me on Instagram, up in the banner, or TikTok, one of these other platforms where I issue short form content. You can always DM me, and I do my best to respond to everybody over there. But yeah, go follow me over there. And if you need help with your credit score, I have an in-house credit repair team. Absolutely incredible. Go check out cashnow.video and sign up. If you need help with your credit score, you want help fixing or improving your score, my team's the best. If you want to get started on YouTube, get on the YouTube grind with me, cashnow.video, work with me directly. And then also, if you want to invest in real estate when the market crashes, I think that is inevitable. I think we're stepping into what I've always called the big rug pull. We're stepping into it right now. Cashnow.video. All right, guys, I'll catch you in the next one.